Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap for the 12th of December. It is a Wednesday. My computer is still in revolt phase, but I think I beat it into submission for the next 20 minutes or so. So fingers crossed. So hope everybody had a great day trading. And of course, following those trading rules. Kind of a bland day in the market, at least by today's standards. We saw a gap on the open, hovered for a while, thinking about maybe we'd want to break out on the intraday before ultimately giving up. We did see a little bit of selling towards the end of the trading day, kind of closing on the weak side of things. Didn't really take out much technically, but definitely didn't make us feel great about going into tomorrow's open, of course. So let's jump right into it. No S&P companies for earnings tonight. And have FTI. Well, tonight FTI is coming out, and no tomorrow before the open. So again, we are definitely in a light stretch of earnings. But before you know it, so yeah, I can understand, Captain. I can definitely understand. I wasn't around the market much today. I was meeting with a couple people, and so I came flying in, and then my computer. I've been fighting with this thing today. Yeah, I bet it was a nice day I didn't day trade today or anything like that, Whitney. I was hanging out with a couple of our tackle members. It was kind of cool. So it was it was okay. It was fun. But definitely I could see some intraday opportunities. No doubt about it. As we kind of look at the S&P, and let's go back into that 15-minute chart just to kind of see where we are kind of really. I mean, we really are sideways on the intraday. We've been, sideways overall, and we're really indecisive. We're constantly getting the headlines of, trade good, trade bad, right? Usually seeing both of them every single day. It's really kind of struggling within this trading range. But on the other side of it, it's holding this trading range, which, of course, we know is a longer-term level of support. And really, as long as that support holds, I think we just kind of have to stick with the status quo, expect volatility, expect it to kind of go back and forth until it kind of stops, as long as support, is clearly held. Now, if we clearly break that support, close below support, I think most of us would probably expect at least some selling as we work down to our next level of support. But right now, it's weird. It's a ton, like Whitney and the captain said, it's a lot of intraday movement, and it seems like there's a lot of action. But then you look at it with a little perspective, and it's really not doing much. It's just not doing very much in a spectacular manner right now, as we're trying to hold support. So not a lot has changed here, in my opinion, at least on the S&P. I do think we can continue to watch those intraday levels. See which one ultimately wins for us. NASDAQ relatively strong today, closing up just shy of 1%. But again, just like the other markets, gapped up, tried, failed, and then kind of sold off there at the end of the trading day. I don't think we really learned a lot technically today. Personally, I don't think we got a lot from an overall market perspective, other than it's going to take more than a gap on the open, at least right now, to get bulls on board. It's one of those, maybe a month ago, we see a gap like that on the open and buyers kind of step in. Right now, we're seeing people just kind of stare. We're all probably, I'm one of them, kind of stare and say, I don't trust that gap to the upside. No way I'm buying that, gap to the upside. So, and it seems like I'm not the only one feeling that way. And good afternoon, Justin. Always a pleasure to see you, my friend. Over in the Dow, ran up, was looking pretty strong early before giving up. I mean, again, we're seeing some, you want to call them gravestones, you just want to call long shadows, reverse hammers, whatever you like to call them. We saw a lot of negativity on the intraday development of today's candle, in my opinion, but we're awfully close to support. We're just going to have to keep an eye and be patient with it, as we appears that maybe we want to test that once again. And then over on the Russell, kind of ran up, same situation for the most part as yesterday, where we kind of ran up. I think maybe you could argue we technically took out that old supportive resistance for a brief moment on the intraday before clearly selling back off of it and closing below that. That really is going to continue to be the major challenge in my mind for the Russell until we're either down further and are dealing with new levels of resistance, or we've taken it out and can start to think that could it be a little bit of a level of support. So, I mean, really just a boring day in the market. And then the last 15 minutes, some pretty good selling to kind of spice it up for us, I guess. As we look at our individual sectors, again, nothing really to see here within the material sector as a whole, kind of still in this general little trading range. We still have to contend with this old support as resistance. And for me, at least, if you're thinking bull, you've got to be above that from a buying perspective. If you're going, onto the bearish side right now on the materials, I really wouldn't have too much to say about it, as long as we hold this breakdown, of course. We do, of course, have our support level not too far away from us, but really it's hard to make much of a bullish case, in my opinion, for the materials sector. I wanted to, I was watching for a break. As you guys know, that break didn't materialize, and well, that pattern's long gone now, right? So if we continue to trade within this range for a little while longer, maybe we will get one of those industrial type situations from I think it was last week, maybe 2 weeks ago, where we went sideways for about a week and then broke to the upside, giving us a little bit of a short-term trading opportunity. We'll have to kind of watch it within this trading range. Over in energy, again, I don't know what you overall do with energy right now. We're kind of stuck between a rock and a hard place, so to speak. A lot of resistance kind of sitting right above us. What I believe, at least, a fairly significant support level. The only thing I know for sure is that was a real good bottom back in the day. Certainly, we're seeing some people respect that support level, and we're kind of smack dab in the middle right now. So, my approach to energy really kind of remains the same. If we are trading into it from a bearish point of view, I think you look individually at stocks like Apache that have broke down already, have taken out support or showing independent weakness. That way, the energy sector as a whole doesn't have to break support, right? If you're bullish, I don't really see the argument for it right now, other than you believe in this support. And while that wouldn't be enough to get me on board as a buyer, I will respect that support level. That if you are one of the energy bulls out there, I don't know many of you, but if you are, I think that's really about the only thing that you can hang your hat on right now. And for me, at least, I mean, we're clearly in a downward trend. Things are ugly. Things are breaking support. Until that gets turned around, you guys know me. I'm a wimp. No way I'm touching that as a bull. Financials didn't even get the benefit of the doubt this morning. And I think that shows us a lot about financials and how much people believe in them right now. Whereas the rest of the market was at least trying to make it interesting early in the trading day. Financials, they kind of worked up to that old support level and just thank you. Not happening, not today. Again, in my opinion, one of the, if not the most, and I think maybe I would think it is the most bearish sector right now. Personally, I think most people would agree is pretty bearish, whether they think it's the most or second most or third most. We're seeing breakdowns, all over the place, and those big banks, ETF, not even trying on days when the market's shown some, at least early strength. And I'm not interested in taking part of that. So for me, I think you continue to treat it the same way. A lot of room to the downside. And until we start to show any signs of life, well, I definitely don't believe in that. I could at least understand folks buying energy off of support. Financials breaking support, I can't understand that. So to me, that's a very ugly, ugly spot. And a good spot for some potential bears. Only problem is they're so beat up that it'd probably be ideal, I think, from a technical point of view to get a little bit of a rally. But no one wants to buy in and get that rally going. I'm not going to be that guy. I doubt you guys are going to be those traders. So we've got to get somebody to push it up, give us a retracement opportunity collectively across the board. Over in industrials, not a lot to see. Unlike the financials, of course, they were able to kind of get back above that support level. We were able to close above that support level here today. Still a very weak chart. Just because you're not as ugly, in my eyes at least, as financials doesn't mean you're not ugly. We do have a support level that is starting to develop as maybe we can trust it, but I don't think we've seen enough just yet to get on that page. If that support falls, there definitely is more room to the downside. But again, much like the market, many of our sectors, that's why financials is so disappointing, from a bullish point of view, whether you like energy or don't, believe in industrials or don't, we're seeing these things hold up as support as a general rule. Of course, then you have our old friends in financials, and well, yeah, they're not interested in that. So not a lot has changed. Again, we're kind of stuck in here. I'm going to watch this general range between this old trend line as some resistance. Obviously, this swing low from back here, it looked like it was trying to get going before things got rough last week. Now we have these challenges that we have to contend with, and if we do want to try to get bullish again. Over in tech, again, not a lot to see from a technical point of view, but a fairly reasonable, percentage day relatively to the rest of the market, kind of held its own, just like the overall indexes did as we're working our way. I'm going to go ahead and add our short-term averages here to see kind of where we're at. These areas, of course, can act as resistance type of catalysts, not necessarily specifically resistance, but catalysts. And so if we hadn't just put in this higher low or held support, however you want to word it, I would think this would be a really interesting bearish retracement opportunity, but that isn't how it played out. We've seen a little bit of relative strength over the last week within the sector. It just hasn't quite turned just yet, but we are starting to see those subtle signs of it maybe trying to. It's put in a higher low. We've seen relative strength on some fairly bad days in the market this last week, with tech kind of leading the charge. Really, we're at an interesting point from a seller's point of view, betting that this old support becomes resistance, but then we have the conflict where we've got to respect this support bounce, right? And we know that this was a longer term level of support. We played off of this 63 and change on a few separate occasions, both from a breakout and a support bounce level. So we're kind of stuck in the middle, just like we are in a few places over in tech, in my opinion. Staples started okay, and then it just kind of got ugly. And again, this is just how I feel. I'm not seeing the signs of a break or anything just yet. But I think, for me, I'm more neutral on this than maybe some other traders are right now. Off of our nice bounce, we did hold support, but we took it out a few times on the intraday. Not a huge deal, but not what I love to see. We're holding our 50-day moving average. But now all of a sudden, these short-term averages that you can kind of think about as momentum averages in a way, whereas if the 9 is floating above the 20 and they're rising up, price is increasing, right? All of a sudden we've kind of flipped them up on their head, and now we have a falling 20 with a falling 9. Again, you might use a 10 or a 13 or an 80 MA instead, but we're going to see the same thing on these short-term averages. That gives me cause for concern from a bullish perspective. Not enough to say bear, bear, bear. As long as it holds support, I'm not going to be comfortable saying that, but I don't like what I'm seeing with its development this past week or so as a whole. So I will continue to monitor the support level as the primary area. Trading within the sector, I think it's fine. We just want to be picky, right? We want to be trading into those things that are upward trending, looking good, not trying to catch bottoms. Not that that's what we generally try to do, I hope, as traders. But I think that's the right approach to this sector right now. Fine to trade within it from a bullish point of view as long as we hold support. But overall, just loving the sector right now, whereas I was really excited about this pullback back here. I can't say I feel that way from a sector point of view right now. Developed some resistance, had some turnover on our short-term moving averages. Here's some support, although just on the intraday. I don't know. Maybe it's just my spider sense or my paranoia or whatever it is. I don't know. But I'm not loving how that chart is developing, even though I don't think we're seeing really clear sell signals to cause us bearish reasoning just yet. Over in the utilities, I mean, we're basically kind of shorter term time frame, but seeing the same thing that we saw many times back here where we were testing resistance. Now we spent the better part of a week battling that high point, right? That resistance level at around $57. Overall, the sector does remain strong. We are fighting at resistance. One of two things will, of course, happen in the relatively near future. We're either going to pull back off of it, we're going to give up and let it pull back, which I would like to see personally. That's what I'm hoping for. Or we're going to take that resistance out, giving us another opportunity on the buy side. So as long as we're fighting at this resistance, Individual stocks, I have no objection to trading individual utility stocks. Broadly speaking, I do think you either want to pull back or to clearly break through, since we are at a pretty clear level of resistance right now within a very nice sector, no doubt about it. Healthcare, nice movement, especially early. They had really nice movement early, rolling with the market. And of course, just like the rest of the market, ultimately gave up and sold off. Still closing higher than yesterday, so there's a win. But again, another pretty ugly just one-day candle. We've seen this candle many times, and this is what that candle looks like, right? It just doesn't look, all that fantastic, with the movement. Second half of the day, really quite bearish, in a lot of areas in the market, certainly healthcare as well. But again, for me, we have, still held the trend line. No matter whether you believe in that trend line or not, we did clearly hold our support level when we tested it a few days ago. So for me, nothing really has changed overall from how I'm looking at this sector personally, showing, somewhere middle of the pack. It's a middle of the pack chart. Certainly, like I said yesterday, not as ugly as some, uglier than others, but holding trend, holding support, which those things do, of course, matter to me personally. Resistance really has not been changed. Probably the big one I'm looking at is the resistance we were waiting for a breakout, 2 weeks ago, and the high point. We can kind of look at this price action that we saw right here, but I would call that just minor resistance personally, not something that really scares me. At least right now, it doesn't scare me. I'm a wimp. I scare easy. So, maybe I'm singing a different tune tomorrow. But really, as long as this trend line and or the support level down here hold, I think if you're looking bearish, there's plenty of better bearish sectors right now. If you're looking bullish, of course, we're going to be careful directionally trading in a volatile market like this, right? No matter what we're trading, we're going to be cautious. But I do think it's an area, at least for me, I'm comfortable enough from a bullish perspective if I see signals on an individual stock basis. Over in our friends in discretionary, did I get you this idea? Again, kind of worked back into those shorter term averages, holding support, but haven't broke resistance. Again, one of those charts that you just can't love, right? This is the chart only a mother could love. It's still really indecisive, right? We went from being pretty bearish, and I know people were really excited about this bearish retracement back here, but we've seen support hold now over the last little while. We've seen some relative strength on some pretty rough days in the market. Just again, where's the buy signals? They're just not here yet, right? That doesn't mean they won't develop. That doesn't mean they can't develop. And a week from now, we might be seeing some really interesting buy signals. Problem is right now we've got support, and that's about what we can hang our hat on. And well, I'm not just buying off of support generally, and certainly not in this blindly, at least in this market. Obviously, watch how we respond to these averages, but really our challenge in my mind, we have a little short-term challenge kind of on this old support level, but I really think this old level that we were looking at on an intraday level back here, which is lining up with its longer-term averages, the 50 and the 200, are things to be keeping an eye on in the days to come. If you're going short, again, I think you have to be picky and pick and choose on an individual stock basis as opposed to the ETF, because we do have some reasonable support that is developing right now. Believe in it or not, it is there, whereas there are certainly some pretty ugly-looking stocks in this sector right now. So again, I kind of think this is one of those areas that you can be a stock picker in. I really do. There are more ugly than pretty, in my opinion, but there are some that don't look too terrible. Over in real estate, saw that selling develop, and then it really got going, taking out our old trusty trend line that we've really seen act as, it's hindsight's always 2020, but that trend line has been rock solid, closing clearly below it, clearly below the 9, clearly below the 20 EMA. I'm not loving the price action. Now, it might just develop into a retracement for us early next week. I don't think that it's, the type of candle that the price might be interesting, but I'm never buying off of a candle like this. I don't know about you guys. We can see how it develops tomorrow, but now my concern is going to be, we ultimately develop, some upward movement, smack into this old trend line, and that becomes a little bit of resistance. That may or may not happen, but that is going to be a concern of mine until we get a deeper pullback. If we pull back, say test this breakout point, maybe we have some room to operate. But our, not a good day, no doubt about it, over in the real estate. Whether you're looking at that trend line, whether you're looking at those moving averages, whether you're looking at that 3350 little mini breakout point that we kind of saw develop as some resistance a few weeks back, broke all of it. And right now, I think while we still can be open to some bullish retracement opportunities in the days to come, I have a hard time seeing it being tomorrow. I don't think that there's anything that this sector could do. It might have a great green candle tomorrow, but at least from a swing perspective, I don't think I would be interested in it no matter what it does here tomorrow. But really, other than that long trend line, yeah, that's nasty, and that was, honestly gained, if you will. If we go in and look at the candle, I mean, it was just boom, 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 boom. It wasn't until the very end of the day that even buyers or short covers started to come in. I mean, there was no momentum to the upside within the sector today. And that is an ugly candle, Whitney. You're absolutely right. I don't think you can go bearish because the only real bearish signals, I think you could argue that we have, we've broken short-term averages, we've broken a trend line, but those aren't bear signals so much as they are sell signals to me. Those aren't entry type of signals, and again, that's just me. You don't have to agree with that. I don't think we've seen clear bearish signals on this sector, but we are seeing some sell signals right now. And I do think we probably aren't looking, at least I'm not probably buying in on real estate for the rest of the week. I just can't see it, how it could develop. You never know the future. I guess we'll see tomorrow, but I have a hard time thinking that that's going to get me back on board in the short term. And over in the communication services, much like tech and discretionary, are showing some relative strength. Did it here again today. And for whatever it's worth, and it is just a thing, but we were able to close above those short-term averages. Again, we're never broke resistance. In the history of this ETF, it has never broke swing resistance, I should say. Obviously, it's broke intraday resistance on multiple occasions, but we've never seen that happen. Now so I'm not ready to get on board just yet. But as of this moment in time, we've seen, a higher low develop in the short term, right? That can be taken away from us, but today it's there. We've, shown some relative strength on some rough days in the market, much like the tech sector. These guys do share some similarities. A lot of these guys were in the tech sector before they redid the sectors. And so there are some positive things. We still have constantly made lower highs along the way, haven't tested anything. I think as we work into that, potentially at least work into that 50-day moving average should be interesting. If we're going to get some buy side, what I'd love to see is us work into the 50, see some profit taking. That would make sense, regardless of your opinion, right? That nice little upward move ran into a longer term average, maybe some profit taking. We pull back a little bit, create a higher low, and then take another run at that. And I think that might be a signal that could be really interesting if that's the way it develops. Obviously, we're a ways away from that potentially happening. From a sell side on this sector, I mean, many of these charts are still ugly. And so I'm not going to fight anybody who is looking at selling from it. But I do think you have to kind of appreciate the relative strength within the sector in the in the shorter term that we have clearly seen develop. Believe in it or not, it has happened up until today at least, right? But again, another ugly candle. And so as we look ahead into tomorrow, it's going to be interesting. I mean, these candles, some of them are uglier than others, right? That real estate candle is just atrocious. I mean, that is a textbook ugly candle, and so, a lot of our other sectors, we have these gravestones or reverse hammers or whatever you like to call them. Not a ton of candlestick wise momentum going into tomorrow. Of course, we know this market doesn't care about that, right? Tomorrow morning, the market's probably going to gap up or down on news of, rephrase it, on probably no news of trade talks. So, we'll have to see how that goes. I will keep an eye on the Theresa May situation. As of last I checked, there's no resolution there. That could impact the market. So we can kind of check the futures, pre-market tomorrow, see how the market's responding to that. But really, I mean, other than an ugly close, for the most part, today was just a day that not a whole lot happened. There just wasn't a lot of faith, but who thinks there's a lot of faith in this market right now? I don't think anybody, even if we're looking at buy side, none of us have faith just yet. And so another day to prove that point, gap up on the open, put up a fight for a little while, and then, maybe tomorrow, right? So, I mean, it was a lackluster day for sure overall in the market. Over in the VIX, for you, dipping down a little bit here today, still on the higher side of the range. Obviously, our volatility is probably not going to disappear tomorrow. Probably shouldn't expect that, at least. Down a little bit from where it kind of peaked this week. But again, volatility is still pretty high. And that's kind of why I don't really use the VIX in my own trading, Ed, is because I feel like my eyeballs can kind of tell me when volatility is high. And maybe that's just me. You don't have to agree with that. And as I've said before, if it helps you, I don't care what it is. Obviously, you should always use it. But volatility still is certainly in the market right now, no doubt. A little bounce back day for gold as we continue to work into that 200-day moving average. I would like to see it retrace a little deeper. If this is going to be one of those really shallow pullbacks before we take another run, it's going to make it kind of difficult if you're trying to play it on a swing, because I think you have to view that 200-day moving average as a major challenge. Everybody's not going to agree with me there, and I understand that. But for me, I think you have to assume that 200 is going to be tough to break. We've seen some good bullish activity, a nice clean break, higher lows. We looked at this, a while back on the weekly chart. So things are looking pretty solid overall. I wouldn't, go bearish at the 200-day moving average personally, at least. But I do think, I expect it to be tough to break. That's why I was hoping for a little bit of a deeper pullback. So at least if we wanted an opportunity to move in, getting in at 1242, 1243 on a pullback, if the 200 holds, there's still some room for some upside. We get this shallow pullback, the risk to reward, just for me at least, there's no way it could be there. There's no way it could be there, because I'm going to assume that we can't get through the 200 until we do get through the 200. Over in silver, we're getting awfully close to testing that 15. Another really strong day over there, up over 1% here today. We're getting close to resistance now. When we get to resistance, never assume it's going to break. We've probably all been guilty of expecting a breakout, and that's fine that we're prepared for a breakout, but don't assume because we think that it is gonna happen, right? So, monitor it. Obviously, if you're interested in a break, we're getting to the point where it could happen really any day now. On the other side of things, how surprised are any of us are going to be in 3 days if it's sold off of this price point like it has so many times in the past? So, exactly, Justin. VIX is a good fear indicator. There's no doubt. I just think when you see giant red candles, I think that kind of, and again, this is just my opinion. You don't have to agree with it. And like I said, if the VIX is helpful for you, please, of course, use it. I just feel like seeing big candles develop that are clearly bigger than what they used to be in the market. For me, I guess I feel like I can read it. I guess I feel like my eyeballs do what the VIX does. And again, that's just me. But yeah, it definitely is. There's still fear in the market, regardless of my opinion on the VIX, right? So definitely some fear going on. Obviously, keep an eye on that 15 range. We're getting close, but assume it's going to be a challenge. It's been a nice run, and my hat's off to anybody who did trade it directionally off of the bounce, down there in the low 14s. You're braver than me, but you deserve to be paid for that bravery. Keep an eye on that resistance level. Prepare for it to struggle there. If you're in it, hope it breaks, of course. Maybe a hedging point. If I'm long, in SLV, for example, selling a covered call against it right now, maybe something I would be interested in doing. If I have a long call, maybe rolling it into a bull call spread or some sort of diagonal would be something I'm interested, because again, at resistance, I always expect resistance to cause us trouble. Sometimes I'm wrong, but I'm never unpleasantly surprised, I guess, if you will. Over in the dollar, back and forth type of a day. Really not a whole lot to see here. Continue overall to push to the upside, working into resistance, seeing overall strength, but not really a ton to see here from a technical point of view. I think, Coach T is looking at this from a neutral perspective until we cleanly break. And I would agree with that. I know some people are going to be more aggressive on the dollar, and I think that's fine right now, as long as it, like I said before, the 50 is definitely, something we can be keeping an eye on. That 96 range of support, something we can keep an eye on. As long as these things remain intact, I have no objection to looking at the dollar from a bullish point of view. I do kind of agree with Coach T that, it is bullish, more bullish than a bearish, obviously, but kind of taking a neutral view until we, can cleanly break through that resistance level, especially now that we've had that quick bounce off of that 50-day moving average. Over in natural gas, we sold off. Wanted to come into an hourly chart here on natural gas. So we kind of took out, so we've kind of been talking about that 425, that $4, that 480 range. Here on the intraday, we took out that 425 range pretty cleanly, broke down, a lot of selling, rallied back up into it, and pushed back to the downside. So predictable, made sense, right? Whether you trade it or not, love when things make sense. Okay, people sold when it broke support. We're approaching, that $4 area, which should be a little bit of a stronger level of support, if nothing else psychologically. So it can be something that we keep an eye on as we move forward, especially if we're looking for, opportunities to work into this. Obviously, when you look at the candle on a daily basis, much like our real estate candle, yuck, right? No matter what it does tomorrow, unless it's, an intraday action, of course, from a swing point of view, there's nothing this could do tomorrow that would get me to buy. Nothing at all. It could go up another 11% like it did, a couple days back in here. I still couldn't buy it. But let's see what happens if we work our way back down into that $4 range, because really we are pretty sideways overall. When we look at the hourly chart, kind of break it down, since that break occurred, this is a really sideways looking chart, right? Yeah, we took out kind of some middle support here today, but really we are very sideways when we take that bird's eye view and look at natural gas a little closer. So we'll keep an eye on it as we continue to work our way to that $4 range. I don't think you can buy blindly off $4, which I never think you can buy blindly, but I do think with that being our previous swing, with us being pretty sideways, over the last little while, that can be a price that we keep an eye on. Maybe something interesting can happen over there. And then lastly, our good old friends in crude oil surged early. Another headline I saw, oil surges. Oh my God, you're driving me crazy. It's up 1.5%. That's not surging. But whatever, it is what it is. We continue to trade within that 55 and 50 range. We're seeing that 20-day moving average kind of starting to apply a little bit of pressure. It's one of those situations where in the days to come, either we're going to give up 50 or we're going to have to pop back above those averages, which is going to turn them around, right? And that's the type of thing, a few days ago, I think we talked about, and I'd still say the same thing. I think you can buy above here. I don't think I would, but if we break resistance above here, I do think that is a buy signal that we could take. Right now, I couldn't do it, but if we see these moving averages turn over, if we continue to go sideways, that's going to happen, right? We're going to have to close above the 9. We're going to have to break through that 20. They're going to stop being 20 on top of a falling 9 and flip around, right? If we see that and we break resistance, then maybe there could be some interest. Now, we're probably at least a week away of sideways action before that can happen, so I wouldn't hold my breath. I still think if we break 50, that is a better signal than a break of 55, but I do think both of those breaks are technically tradable. If you are a bull, I think that can be a buy side. I would definitely watch that long-term trend line as a resistance level, but we'll talk about that if and when that develops. Of course, as we've talked about many times, there's really not a lot of support till the 43, 44 range. If we break 50, it's already in a downtrend. I think that's why most traders kind of are rooting for it to break 50. It's just a little easier trade from a technical point of view if it develops that way. But as far as today goes, really nothing to see here, right? We're stuck in the sideways range. And hello, Shirley, as always, good to see you. Welcome. Welcome to the show. So a really boring day for crude, even though, the headline this morning, it was surging. And I'm sure there's a headline somewhere out there that sells off because it's down 1.4% at the end of the day. Headlines drive me crazy. So, ladies and gentlemen, that will do the market recap for, really a very, overall uneventful day. I know there was some movement. There was definitely some movement on the intraday level, no doubt about it. But as we kind of look back at this day, all we're going to really be able to get out of it is the buyers, they need to be sold, right? And we see these charts, and whether you're bullish on them or not, I mean, they're all ugly, right? None of them are beautiful. Only utilities really is the only pretty area. All of a sudden we have questions on real estate. We have questions on staples, right? Maybe I have more than you or vice versa, but the questions are there, right? We're starting, so again, it's one of the darn things about, a downward trending market. To get back on track, you got to get people to buy. And when we see things like this, we don't dare buy, even if we want to. It's not reaching, we're not able to because it doesn't fit into our trading rules. And so we've got to get the next trader to get in there first. And so that's why it's always such a challenge. Be interesting to see how we open here tomorrow after what was, we'll look back on probably a pretty uneventful day, especially by today's standards, right? So as always, ladies and gentlemen, thank you so much for your time. It's my pleasure, and I appreciate you showing up each and every day. Be sure to subscribe to the channel and hit the notification bell if you haven't already, so you can always be alerted to any streams or videos that we're doing. And you're very welcome, Ed. My pleasure, my friend. If it helps you, I'm good with it for sure. No doubt about it. Be sure to follow us over at Tackle Trading on Twitter as well to kind of keep up with some of the things that we're seeing on the day-to-day basis. If you enjoyed the market recap, it is always helpful and appreciated if you give it a thumbs up just to let us know that it's helpful and that we're on the right track over here. With that, ladies and gentlemen, thank you so much for your time. Get out of here and happy trading, and I will see you all in the next one.